Welcome, everyone. Today, we'll examine how the United States exerts significant influence in restructuring the global trade balance, particularly through import tariffs and transfer pricing policies in international joint ventures. These issues, which President Trump prominently highlighted during his administration, have profound implications for countries' governance and leadership strategies worldwide. We'll explore the various mechanisms through which the U.S. leverages its position to address trade imbalances. The United States possesses enormous economic leverage due to its position as one of the world's largest consumer markets. This creates a powerful negotiating position since many countries and multinational corporations depend heavily on access to American consumers for their economic success. With this market power, the U.S. can effectively push for trade terms it considers more equitable, influencing how international business partnerships are structured and how profits are distributed across borders. A key tool in the U.S. trade arsenal is its ability to unilaterally impose or adjust tariffs. This was demonstrated clearly during the Trump administration with significant tariffs placed on steel, aluminum, and a wide range of Chinese goods. These measures were explicitly designed to address perceived trade imbalances and protect domestic industries. The impact of such tariff policies extends far beyond U.S. borders, forcing trading partners to reconsider their own economic strategies and potentially renegotiate trade terms. Transfer pricing, the practice of setting prices for transactions between related companies across different countries, has become a major focus of U.S. economic policy. This practice is often used by multinational corporations to shift profits to low-tax jurisdictions, reducing their overall tax burden. The U.S. has responded with increasingly stringent IRS regulations and active participation in international initiatives like the OECD's Base Erosion and Profit Shifting Project. This scrutiny directly affects how international joint ventures structure their operations and financial flows. Despite recent skepticism toward multilateral agreements, the United States maintains substantial influence in major international institutions like the World Trade Organization, International Monetary Fund, and World Bank. This institutional presence allows America to shape global economic norms and policies in ways that align with its interests. By leveraging its position in these forums, the U.S. can address systemic issues in international trade that it believes contribute to imbalances and unfair practices. A significant trend accelerated during the Trump administration was the push toward reshoring, bringing manufacturing operations back to the United States and fundamentally rethinking global supply chains. This strategic shift aimed particularly at reducing dependence on China and has continued to shape how international joint ventures are structured. Companies now increasingly factor in national security considerations and economic independence alongside traditional cost calculations, representing a profound change in global business strategy. As trade balances shift and joint ventures adapt to new realities, countries worldwide must adjust their domestic policies on taxation, subsidies, labor laws, and more. U.S. leadership essentially sets the tone for how other nations respond, whether by aligning with American approaches or developing alternative regional partnerships and policies. This dynamic creates a complex web of adaptation and counter-adaptation that defines modern global economic governance, with the U.S. position often serving as the catalyst for change. In conclusion, the United States possesses unique capabilities to influence and restructure the global trade balance through its economic size, policy tools, and geopolitical position. By addressing import tariffs and transfer pricing issues, the U.S. continues to shape the environment in which international joint ventures operate. These actions have lasting impacts on how countries govern their economies and develop leadership strategies in an interconnected world. Understanding these dynamics is essential for businesses, policymakers, and citizens navigating today's complex global economy.